Welcome to Hand Forged, the podcast where blue-collar grit meets modern insight.
What's up, everybody? Welcome to another episode of Hand Forged. I am your host, Frank LeBlanc. We are here today with Alex DeQuattro.
How we doing?
Not too bad, man. How you doing?
Fantastic.
Good. Me and Alex met through business networking in Newburyport. You joined the group
Last April.
Yep. Been with the group for a while. You were in another chapter before, right?
Two.
Oh,
I've been
gotcha.
in BNI for 7+ years now.
No shit.
Yeah.
How do you like it?
I love it.
Yeah.
25 to 30% of my business comes from BNI.
No shit.
Yep.
Interesting. So we met through BNI. Alex sells Aflac's insurance, or what? How do you say it?
I provide
Okay.
Aflac insurance to businesses so that they can offer it to their employees. Mm-hmm. And it doesn't cost the business any money to do so. It's just whether or not the person wants it, sees the value in it, and can protect him and his family or her and her family.
Yeah. And I wanted to bring Alex on because I feel like Aflac is like almost perfect for the trades. Anybody that's working with their hands on a regular basis, and it's relatively inexpensive. It doesn't cost the employer any money. Cool little service. And it's funny. I feel like Aflac has like the same stigma as like solar companies. I feel like, I don't know, it's just got like this weird stigma around it. I told you about my story with Aflac, right? I
don't remember. No.
Dude. So I got PTSD from this thing. So I had, and this isn't anything against Aflac. It just happened this way. And now I have it just scares me. I had this woman reach out to me. A friend of mine reached out and was like, hey, my friend just started selling Aflac. She wants to, try and get introduced to new business owners. Right. Do you mind, if I hook you guys up and just have her come in? You don't have to buy anything, but she's trying to get her spiel down and all this stuff.
Correct.
All right, sweet. So I line it up. She comes in, and at the time I had, I think, 3 female designers. And we're talking about coverages, and then she's like, oh, does anyone, plan on getting pregnant? And the girl's like, no way, I don't want kids and all this other stuff. And literally 2 weeks later, both of my designers were pregnant. And I lost 2 one was his wife. I lost 2 designers.
It's all your fault.
For fucking 6 months. So it was an absolute nightmare. And I swear to God, I was like, I'm never letting an Aflac person in here again. She was talking to us about cancer coverage too. And I'm like, great. Now they're going to get pregnant. I'm going to get cancer. Awesome. Yeah. So
the way, what it does is a lot of people look at me and say, if I get it, I'm jinxing myself. And I've had this conversation with people over and over again. You have to look at it and say to yourself, I like to compare it to car insurance. If you don't have it, what happens? You can lose a lot more than just your car, bank accounts, house, and so forth. If you do have it, you just keep paying it. Same thing with your car insurance. You don't question it. You just keep paying it. The best thing about the difference between the two, if you use your car insurance to pay for a claim, your rates go up. I'm sure everybody has done that.
Yeah.
You use this stuff, the rates never go up.
Oh, no shit. I didn't know that.
No matter how many times you put a claim in. So an accident plan, I had one lady put an accident claim in 7 times in 1 year.
Damn.
The rates never went up.
And that's guaranteed? The rates will never go up?
The rates will never go up. The only time a rate will go up is if you update your policy, like a disability policy. 1 year you're making $40,000, the next year you're making $60,000. You're going to be eligible for $2,000 that first year, $3,000 the next year. If you want to raise your benefit amount, your cost will go up. That's the only time.
No shit.
Other than that, it just stays the same.
That's interesting. I didn't know that.
And it's the same thing with life insurance too.
All right, let's get into a little bit how did you get into this? How did you start providing insurance?
I was working for a trucking company down in Rhode Island doing body fits. So the dump trucks, van upfits with all the shelving in the inside, plows, the whole 9 yards.
Utility bodies and that type of stuff.
Exactly. And it was sales. Had a blast doing it. I was dealing primarily with dealerships. They would call in, hey, I need a quote on this type of vehicle, this type of body fit. This is what they want on it. I'd put all the parts on it, send them the quote. They'd sign off on it. I'd put it into production. Let them know when they could do it. Had a blast doing it. To me, they started changing my hours. I was working Monday through Friday, 7 to 5. Had a blast. Once they said, oh, no, you're so good with customers, we want to put you on Saturday in the parts. I'm like, I don't want to do parts. I I don't want to deal with people walking in. I do best behind a computer, talking to people over the phone. One thing led to another. They changed my hours. 6 months later, I found another job. The job I found wasn't for me. I was there for 2 days. I was like, yeah, this isn't working. So now I'm out of work. So it's 3 months go by. I took November, December, and January off, put my mind at ease, and said, all right, this is what I'm looking for. This is what I started to find. I went on Indeed. I found Aflac. I went in for an interview. The guy looked at me and goes, have you ever done sales? I explained the previous job. I also owned a photography franchise back in 04, 05, all the way to 09. He goes, what was that like? I said, I went to people's houses, presented to them what they needed for their sports league. And whether or not I got the job, I had a 3-year contract. I had all the paperwork set up. Go through there, take all their pictures. He goes, you presented in front of other people? I says, yeah. He goes, that's exactly what this is, only it's Monday through Friday. I'm like, what else you got to tell me?
I'm not going to be selling parts on Saturdays, right?
No. You know what the funny thing is? I still work on Saturday sometimes.
Yeah.
Because a lot of companies, they don't have the time during the week. They'll say, I can come in on Saturday morning if that works best for you. I've literally brought coffee, donuts, brought it in, bagels. I brought a toaster into one place because they said, well, we don't have a toaster if you're going to bring bagels. I said, I'll bring a toaster.
I got a toaster.
Brought it in. Everything worked fine. They were all having breakfast. I went through my presentation. I'm there for an hour and a half. Hand out my interest sheets. Everybody signed up. And I'm looking and he goes, how'd you do that? He goes, every one of them were like, I don't know. I says, well, they don't know what it is.
Right.
They don't know they need it.
Yep.
Or whether or not they want it. So it's all about whether or not they can use it.
Yeah.
You know, I'll never look at someone and say, yes, you need it, but you'll never use it. No. You know, that's like trying to sell a cancer plan to a 19-year-old.
Yeah.
It's the last thing on their mind.
Right.
My job is to make sure they're aware of what's available. Come down the line, it may run in their family.
Right.
They may have lost a parent to it. They'll say, yes, I'll get it now, because the rates, again, will never go up. Same thing with like critical illness. They get a plan at 19 years old, 20 years old. That plan is $4 a week.
Right.
It's peanuts.
What is critical illness? What's that mean?
Covers heart attack, stroke, coma, end-stage renal failure.
So what does it cover?
Pays a lump sum.
Oh, sure.
So if you have that instance, let's say you have a heart attack, climbing a mountain, God forbid, all right? They take you down, you put your claim in, you go to the doctor, yes, he had a heart attack on this day, this happened, this is what he was doing. Fantastic. Put the claim in, they'll cut you a check for $7,500. You have another one 2 years from now, totally unrelated, they'll cut you a check for 50% of that amount back.
No, sure.
Every one thereafter you have, it's 50%. The first one you get at 100%.
Interesting.
But you at 20, 21 years old, you're paying $4 for this.
Yeah.
When you're 55, you're still paying $4.
Right.
The rates never go up.
So the $7,500, you can use that towards anything?
Do whatever you
medical
want with it.
costs, all whatever. So it's just a check.
Yeah.
Deposit in the bank. That's incredible. That's crazy. Is there like fine print or something?
No.
No? So like it's not like, you can have a heart attack, but you can't have it on top of a mountain.
No.
No.
Every one of them has limitations.
Yeah.
Like pre-existing conditions sometimes, or like the disability one. Like you can't be pregnant and get the policy go into effect and then have it cover the maternity leave.
Right.
You have to have it in effect before you're pregnant. Okay. Same thing with like the hospital plan. You can't say, I'm having surgery on my shoulder. I want to get this plan a week before. No, they're not going to do it. It's an insurance company.
Yeah,
That's like
right.
saying I'm planning on getting into a car accident. I want to
Let me
get
get
this
some
covered.
insurance. Right.
Exactly. They're going to be like, I'll see you next week.
Yeah, right.
You know?
After you drive your car off the bridge.
Exactly.
So that's interesting. How long have you been doing it? How long have you been providing?
8.5 years.
8.5 years?
Yeah, that was February of 17 I started with them.
Interesting. So your job is to kind of go out and educate people, obviously, like this is what we cover. This is kind of what the plans look like. And then you guys provide the coverage. So there's minimums, right, for employees?
For employers, in order to open up the group, I need a minimum of 3 people to participate. One policy each. If one person gets 3, it doesn't equate to it. You have to be 3 different policyholders.
Gotcha.
And it doesn't matter how many policies they want, as long as there's 3. Anything above and beyond that, great. If you have a company that has over 100, I can actually get a different form of Aflac and get the rates even lower, where certain wellness benefits, cancel out pre-existing, get a guaranteed issue on life insurance if that's what they're looking for. But you have to have over 100 employees to do that.
Interesting.
Yeah.
So who is your like biggest client? Like who do you provide for the most? Like what industry?
Oh, God. For the last 2.5 years, I've been doing a lot with nursing homes, Genesis Healthcare.
Like employees in nursing homes?
22,000. They have facilities all over the country.
Interesting.
And I've been working with them for the last 2.5 years. That's actually recently come to an end. Parting ways, to me, it's the business isn't growing. They're more diversing, so you're getting less and less employees. Another business I work with is like firefighters, municipalities.
Oh, that makes sense.
We have an account that I'm working on with my district. There's 12,000 firefighters in the union, and they have 206 locals. So right now we're handling half of them. We have 105 locals right now in the state of Massachusetts. So that's something that we look at because they run into the same thing between short-term disability, accident coverage, cancer coverage, and they have a unique payout if they get hurt, IOD, injury on duty, where they're going to get paid a certain amount, where they can get backfill that because when they're getting that, they're paying taxes on it.
Right.
When they put a disability plan with it, it backfills all the way up to the IRS limit of 72%.
Interesting.
So they're getting all of that money, and anything they get out of Aflac is tax-free.
Right. Oh, no shit. How's that work?
It's on a post-tax basis.
Huh.
So when you get paid for a policy, it's on post-tax. You're going to get exactly what you're getting that you signed up for without taxes coming out of it and not have to claim it.
Interesting.
If you get it on a pre-tax basis, even if it's $1 being paid towards it or on a pre-tax, you're going to end up having to pay taxes on that. So if you're expecting $3,000 a month, you might get $2,450
Right.
because Uncle Sam wants his cut first.
Right.
So
Even on injury stuff.
everything.
Yeah. Interesting. So, all right. So tell me about like the coverages that you provide. Go into detail a little bit for me. So like you have the accidental damage or the accidental injury. You have the cancer coverage.
Yep.
Like, so with the accidental injury, right? Like what would happen? So say I'm a trades guy, right? I'm a framer and I'm framing up houses and, fall off a deck and break a leg. I can't go to work for 6 months. Like what happens in that case?
Well, when I was building my house in Rhode Island, that's exactly what happened. He fell off the
Jesus.
scaffolding, broke his leg. Okay. In that situation, you get treated, go to the hospital, get it done. Once you're well enough, we put the claim in. File a claim saying I got injured on the job, fell off a scaffolding on June 2nd, 2025, 3 p.m. I went to this hospital, got treated, had surgery on this day. I got my leg in a cast. I'm going to be out of work for 5 months. Okay? All of that information is going to dictate how much you're going to get paid. On the accident plan alone, you're going to get paid $2,000 on the broken leg if there's only one bone broken. If it's multiple bones broken, it's $2,000 per bone.
Yeah.
Okay? You're going to get paid for going to the hospital, being transported. You're going to get paid for the crutches. You're going to get paid for the surgery. You're going to get paid for the cast. You're going to get paid for follow-up visits, $25 a whack. If you have PT, you're going to get paid $30 a whack for up to 10 visits. Follow-up visits are 6 visits. And all of it adds up, and that's just on the accident plan. Now, when you couple that with the short-term disability, and let's say your bills are $3,000 a month, so you have a $3,000 short-term, and it'll pay you up to 6 months of that. All right, so for the 5 months you're out, you're getting $3,000 a month tax-free to pay your bills. Okay, that is something that's going to replace your income. That's something a lot of people say, well, why am I insuring my income? Because if you don't get paid, can you still pay your bills?
Right.
And a lot of people out there, the majority of the country, 80%, don't have $1,000 in the bank.
Right.
So when you look at that and you say to yourself, this is going to cost you $25 a week to put this in place, you spend more than that on a lunch now, one day.
True.
So when you look at that and you say, all right, you're going to be out for this amount of time, you have to make sure you pay your bills so that you can come back to work. I had a client, she's a Dunkin' Donuts manager up in Avon, got into a car accident, broke her leg in 3 different places. Now, her annual salary was like in the 40s, all right? She got paid $3,000 a month for the 6 months she was out of work. She got paid on her accident plan, totaling up to $20,000. So when you add up the 18 and 20, that's $38,000 she got for the first 6 months, almost equal her annual salary for the year from where she worked. But she got paid more for being out.
No shit.
And a lot of people look at me and say, wait a minute, I can get paid to be out of work? You have to have documentation.
Right.
There's 3 forms: employer's report, employee's report, and the doctor's report. They all have to match. If they don't match, they're not going to pay the claim.
Right.
You got to remember, it's an insurance company.
Yep.
Okay. And I've had people send me the forms. Knee hurt, shoulder hurt. I'm like, okay, something's a disconnect. I can't send this in. And like, why not? I'm like, it's 2 different body parts.
Right.
They're not going to accept it.
Right.
Now you're opening up Pandora's box.
Yeah.
Now they want all sorts of documentation. What's hurt? When did it get hurt? Show me it in writing. Whereas if it's a clean claim form, all 3 match, you're going to get paid within a week.
So, and that's on top of like workers' comp?
Workers' comp only pays if you get hurt on the job.
Right.
So-
Oh, right.
The disability won't pay if you get hurt on the job. Workers' comp is pay you, I think it's like 60%, but they take taxes out of it. So you're
Right.
getting like 46%. Your accident plan will still pay whether you're on the job or off the job. Okay? The accident plan is like $7 a week.
Right.
All right. So when you're looking at it, you're saying, all right, I'll still get paid on the accident and I'll get paid on workman's comp. Great. But you have the option to put an on-the-job disability plan in place. Granted, it's going to be more expensive than the 25 if you're just getting the off-the-job coverage. So a lot of people just stick with the off-the-job because, one, you don't need to be double covered while
Yeah.
you're at work.
Yeah, but for $7, like,
Well, but on the disability one, it's going to be like another 8 or 9.
yeah.
And granted, $8 or $9 an extra a week, it adds up over the year.
Right.
But if you get injured, it's going to pay for itself.
Right. Right.
You know, I golf a lot. I go to the urgent care at least once a year. Okay?
From golf?
Yeah.
Okay.
Tweak your back, take too much of a divot, right?
Yeah.
I go get it checked out, file my claim, I get paid. My accident plan costs me $400 a year.
Right.
I get paid $200 if I go.
Right.
It's 45 minutes out of my day.
Yeah.
You can make $200 in 45 minutes. Would you take that job?
Probably. Yep. Yeah, I'd take it. So what if you what if you already have insurances though? So like say it is workers' comp, say you do get hurt on the job.
Yep.
You're getting both? Or are you getting paid from, so you can't, it's not like one or the other. You can have both.
You can get paid on both.
Interesting.
On the job, when you have that, the workers' comp's going to pay you. Your accident plan's going to pay you. Okay? They don't correlate benefits. All right? So when you go to the urgent care, let's say you get hurt on the job, you twist your arm, all right? Or a cabinet falls down on you. Feel it in your shoulder, you can't move it. Go get it looked at. You're going to get paid for your workman's comp, all right? You're going to get paid on the accident plan. Your medical pays the doctor. You go to the urgent care, you give them your medical card. You're going to have a copay, say $50, $60. You pay that, you take the documentation home, go on to aflac.com, and then it's going to ask you, what kind of plan is it? Accident, who, what, when, where, and how. Answer all the questions. June 2nd, 3 o'clock in the afternoon, cabinet fell down while I was installing it in the client's house. Went to urgent care, 4:30 at night, in the afternoon rather. There's my documentation, upload it. 3 days, you have a check sitting in your account if you have direct deposit. Otherwise, they mail a check, and nowadays the post office takes 7 to 10 business days.
Yeah, if you ever get
That
it.
was horrible.
If you ever get it.
I did 20 years for the post office.
Did you?
Prior to working at the truck upfitting company, I did 20 years in the post office.
Damn. Yeah, I feel like the post office gets worse and worse
It is.
as I get older. It's like, I actually just had this. So I have like auto pay set up in my bank account for the lease at the showroom.
Yep.
You know, it's just set up. It's easy. I don't have to do anything. I have it all set up auto. And I got an email yesterday from the landlord. He's like, hey, did you pay your lease? Like, it's auto pay, I think. And I went in, looked, says it went out. Like, supposed to get it on the 1st. Here it is the 10th. And he's like, well, we haven't got it yet.
Oh, jeez.
Fuck. And I got to like try and chase that down. The bank says it left the bank, you know, but like just never made it to him. So I'm like, awesome.
Like when you're clicking on the calendar, you want it there by the 1st.
Yeah.
Sometimes if you click it too late, like my electric company is like that, it takes a week for them to send out a check. Well, granted, they're sending it out, paying the postage instead of me paying it. Great. But there are some companies that it's a direct ACH right out of your bank account.
Yeah.
Like my mortgage, I could send it on the 29th. It's there on the 1st.
Right. Yeah.
I'm like, it just makes a lot more sense to do it that way, but they don't.
Yeah. Yeah, it's crazy.
Yeah.
Crazy. I could go on a tangent with a fucking UPS and postal services. But yeah, so that's crazy, man. So like trades, I feel like it just seems like it just makes so much damn sense.
It does, but a lot of them look at it and say, what am I getting out of it?
Yeah.
Well, the value is when something goes wrong, you're prepared.
Right.
Okay. And one thing I learned from my basketball coach in high school, fail to prepare, prepare to fail. If you're not prepared for whatever is going to come down the road, something's going to go wrong.
Right.
Okay. If you don't have a generator and your lights go out, how are you going to keep the food in your fridge?
Yeah.
Okay. How are you going to keep the lights on? How are you going to keep, if you have a kid that has a medical situation where they have to have something plugged in, how are you going to do it? You have to be prepared so that no matter what happens, as a parent, you're providing.
Yeah.
As an individual, you still want to be prepared for stuff.
Yeah.
Like I just met with a firefighter yesterday going over life insurance. And I'm looking at him and going, you're 23 years old. You don't have to get a policy today. You can get one next year. The rates aren't going to be that much different. But you got to ask yourself, you keep putting it off a year, you're going to end up my age saying, oh my God, I don't have any.
Right.
Okay. And at my age, I'm 56 years old right now. The same policy that he's looking at, he can get $500,000. It's only going to be $30 a week. If I do it, it's $300 a week.
Right. Because you're old.
Yeah.
Right.
And as you get older, it gets more expensive because I'm closer to death than he is.
Yeah. Right. Well,
it's an unfortunate way to look at it.
I mean,
yes.
technically, who knows? You could walk out and get hit by a bus and, you know. So you have the life insurance too. That's not through Aflac?
It is.
Oh, that's through Aflac.
Yeah.
Interesting. So, and then the other thing is like the cancer coverage, right? Like nobody wants to talk about that. And it's like the big scary word, but obviously those rates, tell me about those rates. Cause I did some research on like cancer and like how many people are actually getting cancer these days. And it's fucking petrified. Like it's scary.
It is. It is. 1955 when Aflac started, the rates were 1 in 9 got cancer. Back in 2022, they did another update of it. Men are 1 in 2, women are 1 in 3 to get it.
50% for men.
Yeah.
Fucking crazy.
It's gotten to the point where it's not a matter of if, it's a matter of when.
Right.
Okay. And you're talking $9 a week. All right. And when you start dividing that out by 40 hours, you're talking pennies for a plan.
Right.
You can put your spouse on it. Kids are free up until the age of 26. So when you look at the coverage that what you get, you're getting $7,000 on a diagnosis check, all right? And then you're getting $850 per treatment for like chemo, radiation, experimental drugs, all right? And every time you get those treatments, you're getting paid. I had a client down in Worcester. She called me up. She goes, I got bad news. I says, what's the matter? She goes, I got diagnosed with cancer, breast cancer. I says, okay. I said, when did you find out? She goes, this morning. I says, and you're calling me this afternoon. I says, okay. I says, you want to know about your plan? I says, I'm going to go over it with you again right now. I says, when do you start treatment? She goes, well, we have to do surgery first, and then we have to start treatment thereafter. I says, perfect. I said, let me know the dates. I'm going to put them in my calendar. I'm going to make sure we get your claims in. We get everything done. I says, what's your availability tomorrow? She goes, I'm home. Made an appointment down there at 3:30 in the afternoon. I sat with her, filled out the claim form, sent it in. She had her check in 2 days to get her through. Because one thing you have to remember is when you're going through something like that, let's take a typical family, 2 parents, 2 kids. You have a savings account, one parent's income, the other parent's income. One parent goes through this situation, they're not working, you're losing that income. You're now dipping into savings to cover that income.
If you have it.
If you have it. If you don't, so out of those 3 buckets, you're now down to 1. So if you don't have anything that's bringing in money while you're going through this, some of these treatments are 16 weeks. So you're talking 3 or 4 months to go through something like this. If you don't have 3 or 4 months worth of capital to cover your bills to get through this, who's to say, 1, you're still going to have your job when you go back.
Right.
2, you have to now start over, okay? And now they're going to ask you, They can't go into medical questions when you go looking for a job, but they're going to know.
Yeah.
It's going to be something you want to be forward about. Okay. It's something you went through. Everyone's going to be accepting of it. Everyone hopes you live from it. Okay. Not everybody does.
Yeah.
Going through this process every Friday, I was at her house, going through the claim process, what she had for treatment that week, after the surgery, putting in the claims on a weekly basis. And her husband looked at me and goes, can we do this without you having to come here? I said, that's up to you if you want to. If you want to, I'm more than happy to show you what to do. All you're doing is scanning in your documentation, following these questions, sending them in. He said, yeah, I could take care of that. I says, perfect. Because what it does is it puts that money coming in on a regular basis.
Right.
By sending it in once a week, you're getting that check once a week. You know, it may take 3 to 5 business days to get that check out. Once that claim is open, they know it's coming. They're processing it that much quicker. But it supplements that income. So you're not dipping into the savings as much. You have money coming in. And you're talking $850. And again, it's all tax-free.
Right.
Some of the checks I've written, total amounts of checks, you're talking $45,000, $50,000.
On like the cancer coverage?
Just on the cancer plan.
And so what, you get paid on the diagnosis itself?
$7,000.
So as soon as you get diagnosed,
Contact me.
you contact you and you get a check for $7,000.
Yes.
And that's $7,000 can just be used for whatever.
Whatever you want.
Interesting. You just go blow it all in Vegas and be like, fuck it, I'm dying anyways.
I had a client in Worcester, got into a bike accident, motorcycle. Destroyed his leg, okay? He had $7,000 in medical bills. His accident plan alone paid him $11,000, okay? Paid his medical bills, so he's got $4,000 left over. Took $2,500 of it, fixed his bike.
My man.
He's back on the road. I'm looking, I'm going, I'm sorry, did you fix your bike? You're now driving that again?
Yeah.
He goes, well, I know I can't have anything before I drive. I looked at him, I says, I'm sorry, you said what? He goes, I can't have anything before I drive. I says, I don't want to know.
Yeah, don't tell me.
Don't tell me.
Yeah.
I don't want to know.
No shit.
Yeah. Covered everything. And you're talking skin grafts from ankle to ear.
Damn.
Okay. I had one have that situation happen. He had to get airlifted to Beth Israel. $1,500 for the chopper. All right. He got paid on it. All his skin graft got paid. Punctured lung, broken ribs, broken leg, broken arm. Shoulder was dislocated. Everything. His accident plan paid him over $25,000.
No
on
shit.
that particular one. Yeah.
And how much is that again? $7 a week?
$7 a week.
Seems like such a good deal. Like it almost seems like it's like a scam. Like
I've had so many people ask me, how do you make any money on this? I looked at him and I says, we have hundreds of thousands, millions of clients. How many of you think get into an accident?
It's true.
Not all.
Very true. Right.
All right. I'm paying mine. My wife doesn't get into an accident, but she's covered. My son was a senior in high school a couple of years ago. Has his accident plan, right? Playing football, he got injured 3 times. Broke a finger, broke a thumb, dislocated his knee. Every time he got paid. He actually came up to me and goes, do I get any of that money? I looked at him, I'm like, no.
If you want to start buying your own groceries, bro, yeah.
I says, are you paying the premium? No. I says, that's why.
So how does that work with like family and stuff? So if I got it, I can get it for my boys too?
Yeah.
And you pay for that?
Yeah, you'd be a 1-parent family. So
Interesting.
instead of 7, it would be it's 14 for bi-weekly. It goes up to 22, so it would be $11 a week.
So $11 a week, and both of my boys would also be covered.
Correct.
For
And
accident.
it doesn't matter how many kids you have.
Interesting. And that's up to 26, and then they have to get their own?
Correct.
That's interesting.
Yeah, because your boys play lacrosse.
Yeah, right. And one of them's very accident prone. So he's working down in Labor's Union in Boston right now. I'm like, fuck Christ. Something's going to get broken. This kid's broken a lot of bones.
I've had clients look at me and say, I need bubble wrap for my kid. So I want this for the family. I'm like, okay.
Yeah.
And for the family, you're talking $28 bi-weekly. So you're
Right.
talking $14 a week.
Damn.
To cover a family of no matter how many, 2 parents and no matter how many kids.
Yeah, I don't know, man. You got me sold. So how's it work for like an individual buy-in, or does it, like, how's that work?
It has to go through a company,
Has to go through a company.
business to business. So if you're a sole provider or a sole proprietor, you're a one-man operation.
Yeah.
Right? A friend of mine owned a jewelry store. He's married. He has one kid that helps out every once in a while. The kid's got to be over 18. So I said, all right, this can work. He goes, how? I'm the only employee. I said, no, you're not. I said, does your kid help every once in a while? He goes, yeah. I said, perfect. All right, you get the kid a small life policy, get them started. All right, even if it's $25,000, you're talking $4 a week for an 18-year-old. Your wife can get the cancer plan, cover you. You can get your short-term disability and the accident plan. Your accident plan can cover the whole family. So you've got 3 policyholders.
That's fucking brilliant.
When I first started, I thought everybody had to have their own plan.
Yeah.
No one was telling me otherwise. And I'm sitting there, I'm going, this is more difficult than it needs to be. Talked to my regional, a great guy. He's one of my best friends in the company. He's still in the same, he's now the market director. Talked to him, he goes, you have to be a little bit more creative when you're talking with one-person companies or 2-people companies. Once they have a spouse, the spouse helps them a little bit. They can get a policy covering them. The other one can get one covering them.
Yeah.
The most important one is your short-term disability. That's the only one that can cover just the person. All right? That's between you and the company. Cancer, you can cover the whole family. Accident, the whole family. Hospital, the whole family. Life insurance, everyone can get their own policy.
Right.
You know? And a lot of people don't look at it that way. I have a lot of people that look at me and say, well, what do I need life insurance now for? I'm 24 years old. It's cheaper.
Right.
Okay? If you don't smoke, it's a 50% discount. If you smoke, you're paying through the nose.
Right.
Oh, yeah.
Yeah, but a lot of people, I feel like smoking just has gone downhill, and as far as popularity goes, not as many people are smoking.
Not as many, and it's a good thing.
Yeah, for sure.
But you have to prove that you've quit.
Right.
You know?
How the hell do you do that?
Doctors know. When you go to the doctor, you see him typing on his laptop.
Yeah.
Everything he's typing on that laptop goes into the Medical Information Bureau.
Huh.
So if he looks at you and says, oh, Frank's been a smoker for 20 years. Did you quit? Yes. When did you quit? 2 months ago. Great. You quit effective this date. You go to apply for a life insurance policy the next week. It's only been less than 90 days. They go into the Medical Information Bureau. He says, oh, he only quit 60 days ago, but he put on his application he's a non-smoker. They're denying the app.
Oh, no shit. Oh, so it's 90 days.
Minimum of 90 days. You know, I've had so many people ask me, why does they do that? I'm like, it's all about the rates.
Yeah,
Your
right.
chances of dying after you smoke are greater than not. You've
Yeah.
seen the pictures of the lungs,
Right.
the gray one and the pink one.
Yeah. Yeah, and it's an insurance company. Like,
Right.
right. Damn, man. So, all right. So, accidental cancer, life insurance. Let's talk about life insurance a little bit.
Everyone, a lot of people I talk to have a misconception of life insurance. They think it's just a death benefit. It's not. Life insurance is meant to be used during your lifetime. And they have different kinds. Aflac offers just whole and term. And the difference between the two, a lot of them don't know. Term is like renting an apartment. You have it for a certain amount of time, whether it be 10, 20, or 30 years. And at the end of it, you have nothing to show for it. Move out of the apartment, you're done. It's gone. Whole life, you have for your entire life, builds a cash value, has equity in it. It's just like a home. The longer you keep it, the more equity you own in it. Okay? I got my first whole life policy when I was 25. By the time I was 42, I had about $52,000 worth of cash value in it. I took $30,000 out of that because it's my money. I can either take it and lower my death benefit on it or pay it back. But I can pay myself back however I want. Took the $30,000 out, put it as a down payment on a house, a second house. And it was a tenement house. I'm like, okay, I can do that. And my wife at the time looked at me. She goes, where's that money coming from? I said, it's coming from the life policy that I've had for years. She goes, well, we could go on vacation with that. I looked, I was like, no.
Yeah.
I said, you go on vacation with expendable money. You don't take money out of your life insurance policy
Right.
to go on vacation. I said, this is going to create another line of income.
Right.
All right. Once you do that, you get the house, put that in there. All you have to do is just keep paying that money back. Well, you take the rent that you're earning out of the house, you pay that back. So none of it's coming out of your pocket.
Right.
Anything that you're earning stays in the house budget.
Right.
Anything that you're earning on the outside can pay for other stuff.
Yeah.
You know, a friend of mine told me, he goes, if you're going to have toys, you got to pay for them cash. You can't take loans out on toys. I'm like, well, some toys are really expensive. You know, I'm not going to take 30 grand out of a life policy to buy a boat.
Right.
You know,
True. I mean, you could, but
You could.
probably
The
not
wisest
good
thing to do.
practice, right?
No. But the life policies, once you're doing that, I always look at people and saying, when they look at the cost of a whole life policy, it's higher. Term, really low. You've
Right.
seen the ads on the TV. You can get $1 million for $18 a month. Yeah, for a 10-year policy. At the next 10 years, you're now 10 years older. You're not getting that same policy. If you
Right.
get a 30-year term through like an AIG or a New York Life, every 5 years, the rates go up because you're now older.
No
Okay.
shit.
Once you get to 65, not only do the rates go up, but the face value of that policy comes down.
Wow.
It starts squeezing you from the
Interesting.
top to bottom. I've had a client at a company in Danvers look at me and saying, the company policy that they're offering, as soon as I turn 65, it goes from 100,000 to 50,000.
Jesus.
I need 100. I'm looking at him going, why are they doing that? He goes, that's the way the policy was built. I said, but was it explained to you that way when you got it? He goes, absolutely not.
Right.
They just showed me that it was $20 a paycheck.
Right.
And I says, yeah. I said, because some people look at life policies and they only look at what's it going to come out of my pocket? How much is it going to cost?
Right.
You have to look at the entire picture of it. What is it going to do for you? How long is it going to last? And what is it really there for? So when I was 25, I got my 2 policies, one whole, one term. The term was a 30-year because I had just built my house. I had a 30-year mortgage. I'm like, I want this to cover the mortgage. If I die prior to that house being paid off, this will pay it off. The rest of it will be fun money, go to my niece and nephews because I didn't have kids at the time. As you grow in that house, that policy still has the same amount. You don't owe as much, but it still has the same amount, but it's matched up to it. Same thing with if you have college tuition. You know you're going to be paying tuition over the next 15 years. You get a term policy for $250,000 for 15 years. You're going to pay $75 a month. Well, if you pass away in year 4, how is that going to get paid? Off the life policy.
Interesting.
So term policies have a unique value to them as far as how you can use them for
Right.
certain things.
Certain things, right.
And it keeps your costs down.
Right.
So if I look at someone and say a $300,000 policy at age 25, you're talking $100 a month. If you do 150 term and 150 in whole, you're talking 60 and 10, $70. So you save $30. You're still getting the same coverage over that 30 years. At the end of that 30 years, you have 150 in whole.
Right.
Okay, which is still earning a cash value. It's still growing. And once you hit 62, if that policy is enough cash value in it, you can flip that to an annuity. Okay, cash it in, flip it to an annuity, and have it pay you a dividend every month as part of your income in retirement. Or you can buy a larger life policy with a long-term care rider in it. Unfortunately, Massachusetts doesn't like that. Massachusetts is very finicky when it comes to long-term care piggybacked on a life policy.
Is it based off of where you work or where you live?
Residence,
Okay.
where you live. So if you live in New Hampshire and you work in Mass, you're fine because it's going to be a New Hampshire policy.
Right.
Same thing, a friend of mine owns a company in Rhode Island, has a policy of $1 million to another company, wants to cash it in, has $400,000 in cash value in it. So you're sitting there going, all right, what do you want to do with this? I want to get my long-term care set up. Great. Bought another $1 million policy, put a long-term care rider on it, all right? Took the $400,000, put it down on the premiums because now he's not 26 anymore when he got it.
Right.
He's now 60,
Yeah.
okay? So it's expensive. By putting that down on his premiums are only $200 a month.
Right.
And I've had people look at me going, how is it that cheap when he's 60 years old? I says, you took $400,000
And put it towards it.
put it towards the payments,
Right.
okay?
What's that rider mean?
The long-term care rider is if you go into assisted living, like a friend of ours, David Williams, talks about going into assisted living. Brian talked about it today
This
going
morning.
there.
Yeah.
When you go into assisted living, they look at your assets, okay? If you don't have everything in an irrevocable trust for the last 5 years, they can come after all of your assets, okay? That's why people say when you get like 65, it's time to put everything in an irrevocable trust because you don't know how long you have.
Right.
Okay. That just means someone else has to sign off on stuff. You're still in charge of your money. You're still in charge of your house. It's just under a different name.
Right.
All right. It's an umbrella. protection. The long-term care rider pays the assisted living place off that policy.
Off the policy.
As opposed to it coming out of your pocket.
Makes sense.
Okay? That's why you're using your life policy before you're dead.
Right.
Now, that's going to come off of your death benefit. So that $1 million policy, let's say he uses $250 before he dies, all right? That's going to come off that $1 million. So he's going to get $750,000 in a death benefit. And I'm like, he ain't getting anything. He dead.
Yeah, right. Right.
His two kids are going to get
kids get it.
$375,
Right.
as opposed to $500,000. And he looked at me and goes, is that enough? I looked at him, I'm like, is it enough? I said, do you know how many people out here don't get a dime?
Nothing, right? Yeah.
I'm
My
like-
father died with like $23 in his wallet. You know?
You know? And there's so many people out there that aren't prepared for doing it. And don't get me wrong, I'm a proponent of being prepared to cover myself and my family. After I'm gone, well, that's up to you.
Yeah.
You're going to be a grown man at that point in time.
Yeah.
You need to support yourself. You
Yeah.
can't look at me and say, no, don't spend my inheritance. And you hear about those stories all the time. They're
Right.
like, can you give us something? I'm going, that's not their job.
Yeah.
Their job is to make sure that they have enough money before they pass.
Yep.
And more often than not, there is something, okay? Whether it be a little bit or a lot.
Yeah.
Like when my aunt passed, she had no kids. She had a $10,000 life policy for every niece and nephew, 7 of them, okay? It's a bonus,
Yeah.
okay? But the premiums on them, because she bought whole life for each one of them, and it was based off of the kid's age and her passing, okay? I'm like, that's based off of her, not the kid's age.
Right.
The kid's the beneficiary.
Right.
And she goes, is that why it's so expensive? I'm like, yeah.
Yeah. Right.
I'm like, because you're not healthy. You're a diabetic.
Yeah.
All right. And if you are, you get whole life through work. If it's guaranteed issue, get a policy.
Yeah.
Okay. Because you can't get it outside once you're a diabetic.
Right. What's like the average amount that people take out for life insurance? Like so I'm 40 years old, healthy, wanted to take out a whole life insurance policy. Like how much? How much should I?
The equation that I go through with people is, what do you want to cover with it?
Right.
You want to cover final expenses. You want to cover replacing your income for the next 20 years. And you want to give your kids something
You
left.
want to replace your income for the next 20 years?
Yeah, a lot of people don't think about it, because once you're gone, what does your income pay for? The house your kids are living in,
Yeah.
okay? All of a sudden, your income's not coming in anymore,
Right.
okay?
Right.
So where's that money coming from to pay for the house? If it's paying for anything else on top of that. So you look at your bills and say, all right, this is what I bring in a year, take home, not gross, because the government's not getting paid off of that. Finally, they don't get something. You look at that, how much income, multiply that by how many years you would have worked. That's how much should be the normal amount. So many times people will look at it and say, well, if I get $200,000 or $250,000, it's only going to replace my income for, say, 3 years. Okay. Okay. What happens in 3 years? Do you have a term policy that's covering your mortgage? Because if you do, that takes care of the house. Now you're only talking about your income on the whole side. So it keeps your costs down, but it still gives you the coverage that you need,
Right.
you know?
Makes sense.
And if your kids are under 18, you have to make sure there's an executor that's going to be, or a guardian for them, so that they have access to that money to support those kids.
Right.
You know, college tuitions,
Yeah.
because you can't bank on scholarships. You got to take into effect that it's going to be a traumatic situation. They're losing their dad young. They're still in school. Are their grades going to slip? Are they going to lose money?
Scholarship.
Yeah.
Yeah. Yeah. It makes sense.
You know, and people don't look at that. When I'm looking, a lot of people I've been dealing with for the last couple of years, they're making $40,000 to $50,000 a year.
Yeah.
They're not getting a $200,000 policy.
Right.
Okay. They're looking at final expenses, give a little something to their kids. 50,000, boom, done.
Yeah. Right.
You know, whereas head of household, you have to look at the total amount. Like,
Makes sense.
I have one client, I talked to her, she was a single mom. She goes, I want to make sure my kids are covered. I says, what's it going to cost to pay for your house and replace your income? And she gave me the balance on her house, what was owed, all right, was $180,000. And then her income was $70,000 a year. I said, all right, so you need anywhere between $400,000 and $500,000, because once that money comes in, you're going to put that into an account that's going to earn interest. you're going to not just spend the 500 grand.
Right.
You're going to use that as that interest coming in to help pay for things.
Right.
All right. Certain things like that 180 is going to pay off the house, so you don't have that bill. So now the other 320 is going to be sitting there, earning interest, putting an income in there to help support the kids.
Yeah.
The guardian can use that and say, all right, this is the income that her salary was bringing in.
Yeah.
So you may have the total amount for 3 years, but that income off that interest rate, putting into a good fund that's going to pay you that to supplement their cost of living.
Right.
All right. And then once they're 25, then they can split that.
Yeah.
Okay. Because at that point in time, they should be on their own, surviving.
Making good decisions, hopefully.
And there's some that do, there's some that don't.
Yeah.
You know?
So let's say 40 years old, healthy, looking for like, I don't know, a $1.5 million policy. What's something like that look like?
Aflac only goes up to 500,000. I would have to go to one of my other carriers, probably like a Mass Mutual. So you'd be looking at $60 a week, $70 a week.
Somewhere in there.
Yeah.
Interesting.
But your cash value on that by the time you're 65 would probably be in the range of 300 to 500,000.
By the time I'm 65, so in 25 years,
Yeah.
you have that cash value, and you can just take that money out of it. Interesting. That's kind of cool.
Yeah, because especially like a Mass Mutual, all their money goes into mutual funds.
Right.
Okay. Policyholders own the company.
Yeah.
It's not a board of directors because it's all mutuals. All right. All mutual funds are owned by the policyholders, not shareholders.
I didn't realize that.
Yeah. It's all in their name.
Yeah.
Boston Mutual, Mass Mutual. That's how they get their funds. That's how they're earning their interest.
Right.
All right. A New York Life is playing the stock market with your money.
Right.
First 5 or 6 years, you have no cash value in that. It's barely paying for the policy. All right. So if you pass in that first 5 years, they're losing money. Okay. There's some scrutiny involved. First 2 years, you commit a felony or suicide rather in the first 2 years, doesn't pay.
No shit. After the 2 years, it does?
After the 2, yeah.
Why?
Because
I get it.
the
Yeah.
stipulation,
Right.
I want to make sure my family is all set. I'm going to jump off a bridge. I got my life policy for $1 million
Right.
a month ago. I have the policy in hand.
All set.
Boom.
See you later. Yeah.
Off the bridge I go.
Makes sense.
And the company's sitting there going, yeah, no.
No.
Like, I had a
I
client.
wonder who the one came up with the 2 years. Like, to take 2 years to change your mind.
Right. Well, that's just it. If you're thinking of suicide, you're not waiting 2 years.
Yeah, right.
Some wait a year, not 2.
Yeah, no
You
shit.
know, they want to put that bar
I would
far
have made
enough
it. I
out.
would have made it 3.
I had a client got into a car accident. All right. He had a $25,000 Aflac whole life policy, 35 years old. According to the police report, fell asleep at the wheel, cut across Route 6 in Raynham, hit a tractor trailer that was parked in the rest area, blew up, flames. Trailer blew up in flames. Camper parked 3 spots away, melted,
Damn.
gone. He passed. I get the medical report. I'm like, okay. And the father's calling me up saying, I want to cash in his life policy. I said, I know he has one. I said, yeah, it's a $25,000 policy. I said, there's a problem. He goes, what's the problem? I says, did you look at the medical report? He goes, what does that have to do with anything? I says, read the medical report. And I went to the funeral. I talked to them. Went to the wake. I said, look, we're not going to do this here. I'll come by in a week. We'll go over everything. I went through the medical report with him. Blood alcohol level was 0.24.
Jesus.
He goes, he fell asleep. I says, no, he passed out.
Yeah, he has a difference.
I says, that's 3 times the legal limit. I said, that's a DUI. That's a felony. Policy doesn't pay you when you commit a felony.
Damn. No shit.
No shit. And he goes, I'll sue. I says, no matter what attorney you get, I says, they're going to look at this. They're gonna have to see it because Aflac is going to show them that.
Right.
He goes, well, how are they going to get the medical report? I looked at him. I says, public knowledge.
Right.
I says, anybody can look at that.
Yeah.
They pull up the accident report. They look at the medical report, and they're like, oh, ethanol, 0.24.
Yeah.
Have a nice day.
Right.
And you look at it and you say, there's really nothing I can do.
Right.
You know?
That's a tough conversation at a tough time too.
It is. And it's not something I relish in.
Yeah, it sucks.
It's something like when you're going through, I've had a couple of clients with a cancer plan. They get paid out, they end up passing due to it, okay? And it's 9 out of 10 times because they got contracted it, figured out they had it too late. And you look at him and you're saying, yes, you got paid off your policy. Here you go. I'm sorry for your loss. And they look at you as like, it's not your fault. You did everything you could.
Right.
I'm like, there's nothing you can do.
Yeah.
You know, I show up to the wake. People are looking at like, who's that? Who's that? And I was, oh, that's my insurance guy. And they're like, I've had people ask me, like, why are you here? I says, to pay my respects. I'm like, I knew the person.
Right.
A lot of my clients are friends.
Right.
Okay. One thing I pride myself on is when I go into one of my accounts, I want them to say, hi, Al, how you doing?
Yeah.
How can we help you today? All right. I make sure that I never have an account that looks at me as, oh, he's back again. What do you want? You know? And it's all based off of when I tell them when they get their policy, how they're going to get paid, when they're going to get paid, is the value there.
Right.
If they put a claim in and they don't get paid, they're not going to be happy.
Right.
Okay? If they say, well, I have to jump through all these hoops to get these forms, I'm like, it's 3 forms.
Yeah.
You're
Right.
going to your doctor. You can go see your boss, and the other one's you.
Right.
It's not a hoop.
Right.
I help you with it. You send them to me before you send them in.
Right.
I make sure all the T's are crossed, all the dots are right. Sometimes I'll look at them and say, yeah, you missed a line. What is it? What's the date you went out?
Right.
Where's the documentation from the doctor? Okay? I know what they're going to look for.
Yeah.
I've been doing this long enough to know that's not going to fly. That is going to fly. You'll have your check in a week.
Right.
You know, I've taken over accounts. So the guy says, the last guy we had told me to call an 800 number to file my claim. I'm like, excuse me? All right. And he goes, yeah. I said, well, I guess that'll explain why I took over the account.
Right.
I said, send me your documentation. He emailed me everything, 30 pages of stuff. Hurt his wrist on an ATV. Trying to get a claim in on his accident plan, trying to get a claim in on his disability. I said, how much time did you miss from work? He goes, 3 weeks. I'm like, how much overtime did you miss? He goes, a lot. He goes, I do about 30 hours of overtime a week. And I'm like, okay. The guy's making $60 an hour. Okay.
Right.
He's missing tens of thousands of dollars. I fill out the paperwork. I said, I'm going to email you something. It's going to come in as a DocuSign. Sign the bottom of it. Read it. I want to make sure you understand what it is. If you have questions, call me. We went over everything, 15 minutes. He emailed it back with his signature on it. I sent it in. 2 weeks, he had a check for $8,500 just on his accident plan. He goes, is that it? I says, oh, no, that's just your accident. Your disability plan's coming. I said, we sent that in on us the next day. He got another check. What was it, 3 weeks? So he got $3,800 because he was at $4,000. He goes, why did that take so less time? I looked at it. I said, because it takes a personal touch.
Yeah.
I said, you calling the 800 number? They're going to say, okay, we'll mail you out the forms.
Yeah.
There's a week.
Yeah, maybe.
You know, and you're looking at it saying, when am I getting this stuff?
Yeah.
Why isn't someone helping me? I said, that's what I do. I go back into that account once a year, every one of them. Hi, Al. How you doing? They're upstairs. They're waiting for you. I'm like, fantastic.
What happens if you do screw up on one of the forms? Like, say I filled something out and I didn't send it to you first and I just sent it in and, like, didn't put something in.
They send a message through your portal in aflac.com. This is filled out correctly. Fix it.
Oh,
But they send all 3 pages back.
Yeah. So they don't deny it.
No. They'll say, this isn't correct. Okay? Something doesn't make sense. Well, now their antennas are up.
Right. Now they want more information.
They want the doctor's notes.
Yeah.
Okay? Try to get the doctor's notes out of them.
Right.
They want to see patients so that they can charge medical companies.
Right.
Okay? Providers. They're not doing paperwork.
Right.
You have to go to the PA and say, hey, can I get the doctor's notes on this because I'm trying to file a claim? You know?
Yep.
I'll tell the doctor straight up. When I tore my bicep a few years ago, I says, I'm going to be putting a claim in for my hospital, and I'm putting a claim in on my disability and my accident. He goes, He goes, just bring the forms with me. I'm like, okay. I brought all the forms. He goes, let me look at your arm. I says, sign first. Don't forget your tax ID number. I want everything done first. I says, because I know they're going to knock at the door and you're going to be running out of here.
Right.
I'm not chasing you.
Yeah, right.
I said, there isn't a patient in here that wants me coming in that door.
Yeah.
He goes, okay. Filled everything out, looked at my arm. Everything's good. I says, have a great day.
That's sweet.
And if you know what you're looking for, it's easy.
Yeah, right.
I've been doing it for 8.5 years. It's easy for me.
Yeah.
If you're filling out that form, there's a whole bunch of blank lines.
Right.
What am I doing?
Yeah.
I've put people on Zoom. All right, you're going to look at this next, read it. Boom, there it is. And I'll have a blank form up on my other screen, so I know exactly what they're looking at.
Yeah.
I know the next line that's going to be. And again, did I know that in my first 2 years? No.
Yeah.
A lot of stuff I learned along the way. And I have new agents now that'll look at me and say, how do you know this? I'm like, it's repetition.
Right. It's like anything else.
I have had clients that had major claims. All right. When I first started, I didn't. I was using my district's stories. And they tell you stories sell. Giving you the example of how people get hurt, how they got paid, why they got paid.
Right.
Everybody sees the Aflac commercials. They see a duck handing out cash. Great. They see a guy with a cast in his bed. They didn't show the process of it.
Right.
And I understand they're not going to put that in a commercial. Well, you got to fill this out and fill this out and fill this out.
That doesn't sell.
No. All they show is, all right, he's injured, he's out of work, he's getting paid.
Yeah.
It's a short synopsis.
Yeah.
There's a bigger picture involved, okay? And it's the largest sales force in the country is Aflac agents.
That's crazy.
We pay out more in claims every year than our closest competitor takes in premiums.
Damn. No shit, huh?
No shit.
How many members?
Policyholders?
Yeah, policyholder. Yeah,
We're in the millions.
In the millions.
Easily.
Oh, shit.
Easily 8 figures. Well, you think about this, 340, 350 million people in the country.
Right. Yeah, that's crazy. You said Aflac only does up to $500,000 on life insurance?
Correct.
What's that look like for monthly?
40 years old, no smoke, good health. Probably between 1 and 200
a month.
Yeah.
Interesting.
Mm-hmm. And again, your rates aren't going to go up.
Right.
Yeah.
Yeah, and that's a whole life.
Whole life.
And that's the one that's got cash value.
Correct.
Down the road. How long does it take before you start getting some cash value on the thing?
Between the 5 and 10 year mark.
Right.
Yeah.
That's what I was going to say. 10 years.
I had a client, funny guy. I love him. Sometimes he just calls me up to tell me jokes. I'm like, okay. Middle of the day, I'm like, yeah, I got a lot of things to do here.
Yeah.
He'll call me up and say, hey, I'm thinking of getting some cash value out of my policy. I'm like, Dave, you've had it for 2 years. He goes, how much cash value can you get? I says, I tell you what, I'll send it in. All right.
You're about 30 cents, bud.
$7.40.
Nice.
He goes, that's not going to help me. I looked at him, I says, what do you want me to tell you?
Right.
I'm like, you've been paying for your policy, right? It's less than a $100,000 policy. I'm like, you're not going to see a large cash value.
Right.
I had a client in North Carolina, got a $200,000 whole life policy. He goes, when do I start seeing cash value? I says, call me after 10 years. He goes, I got to pay for this thing for 10 years. I says, you got to pay for this thing for the rest of your life.
Right.
I said, that number is not going away. It's not going up. It's not going down.
Right.
I says, once you start getting the cash value after that 10-year mark, then you'll see how it's growing.
Yeah.
Okay. And he's like, all right. I says, what are you planning on? He goes, well, I want to buy a house. I says, don't look at this now. I says, look at this for your second house.
Right.
I says, you're just getting involved with it. I says, you're 32. It's going to grow. All right. Before, God forbid, something happens to you, it's going to grow a lot. Be patient with it. It's almost like the set it and forget it.
Right.
So
what happens if I fucking sign up for life insurance today, right?
Yep.
$500,000 policy and I die tomorrow?
If the policy's in effect, you get paid.
No shit.
Depending on how you died.
Depending on how you died.
You get hit by a
not
bus. Suicide.
Suicide.
And committing a felony.
And committing a felony. So if I
And if you
if I
falsify
get
your
shot
application.
robbing a bank, they ain't covering that shit.
No.
No shit.
Yeah.
I mean, cases like that, though, company loses money, right?
Oh,
I
yeah.
mean, right.
Oh, yeah.
But it just doesn't happen enough where people are going bankrupt.
I've showed
That's
people
such a fucking risk.
how much they put into their policy, all right? Age 40 to age 70. They passed away at 70. They have a $250,000 policy. It showed that they put in $70,000 in premiums. I'm like, okay. Beneficiaries look at me and going, don't I get that 70,000 back? I looked almost like, you're getting 250.
Right.
70's in it.
Yeah, right, right.
He goes, well, what did they do with that 70,000? I was like, it's in your check.
Right.
I said, they may have taken it and they may have made interest off of it.
Right.
Okay. But it's in your check.
Probably not enough to cover the 200.
Not even close.
Right.
But you have a lot of people that'll pay for a policy for 2 years. Term policy. Someone outlives it. That money's gone.
Yeah.
Okay. That's why it's specifically meant for specific things.
Right.
Okay. They don't tell you that on the
not
TV.
even specific things, just in case specific things.
Yeah. You know, mortgages are the first one. Next is student loans.
Right.
I had a veterinarian in Central Mass. Student loan was $400,000. I'm like, okay.
Ouch.
And I says, yeah. She goes, I want to make sure it's covered. If I die, they don't have to pay it. I'm like, okay. I says, we can do two. I said, you can do 200. Actually, you can do all of it in term if you want, or split it so you have whole after the fact. Went over the cost.
That's a good idea. Yeah.
Went over the cost of it because she was under 50 years old. After 50, you can only get 200,000. Went over it. She goes, oh, I'll do it all in term. She goes, it's specific. It's going to cover that. I says, perfect. My boss is looking at me going, why would you sell them term? She goes, she's under 40. I looked, I was like, that's just covering her student loans. That's
Yeah.
all she wanted it for.
Right.
I said, she has another whole policy of $100,000 that she's paying separately.
Yeah.
That's for her final expenses, everything else. I says, the term is 30 years.
Right.
Her note ended after 15. So she could have done a 20-year on that. I'm like, keep it for the 30. If you're happy with the cost, keep it for the 30.
Right.
I says,
Might
when
as
you're
well.
close to 70,
Right.
you're going to lose that anyways.
Right.
The one thing about term is it's guaranteed renewable. So when you're 40 years old, you get a huge term policy. At age 70, you're guaranteed to be renewable. It doesn't matter what your health is. Okay? Once you do that, but it's at an age 70-year-old person,
Right.
not going to be the same cost.
Right. So you can get renewed, but it's going to be more expensive. Interesting.
And a 70-year-old isn't picking up another $400,000 term policy.
Fucking why would you? Well, yeah. I don't know.
They're
Who knows?
looking at final expenses.
Yeah,
and you're
right.
only going to get a 10-year policy.
Right.
Anything after 60 in term is a 10-year policy. After 50 is a 20. Before that, you can get a 30. So,
Interesting.
Yep.
Well, what else? Anything else that you guys
oh, God. In Massachusetts, they have vision. In New Hampshire, they have dental and vision.
no shit.
Yeah, the dental in New Hampshire is actually pretty good. It rivals Delta Dental. Cost, coverage, the whole 9 yards. Vision's cheap.
Now is that so as far as dental go, is that like accidental?
No.
Oh, so like anything.
Cleanings,
You go and get
x-rays,
cleanings, you get
bite
paid.
wings,
Interesting.
root canals, bridges, crowns, the whole 9 yards.
No shit. So you
Yeah.
get paid out on those things.
Yep.
Massachusetts doesn't have that.
Massachusetts, Aflac took dental out of Mass beginning of the year.
Why?
It was a mess. But just put it in plain English. Massachusetts Department of Insurance looked at them and said, if you want to keep dental in here because of the law that passed in Mass, 85% of the premiums that you pay for dental has to go towards claims. Well, that leaves 15% left of the premiums to go to pay for it, okay, and to pay the insurance person that sold it and the provider. So my market looked at me at that point in time and said, you know what? There's going to be no commission on that because there's no room for it.
Yeah, right. It's no money.
You'll get production and that's it.
Right.
So I'm like, okay, right off the bat, I'm not getting paid on this if I offer it.
Right.
Well, the Department of Insurance said, that's not good enough. So Aflac said, you know what? We'll just take it out of Massachusetts. So it's the only state in the union that doesn't offer dental through Aflac.
Fucking Massachusetts, man.
Oh,
So glad I'm a New Hampshire guy.
I'll tell you, there's no sales tax in New Hampshire. They don't tax federal pensions, okay? Property tax is higher, which is sales tax, property tax. 6 of one, half a dozen of the other.
Right.
So, but the Department of Insurance in Massachusetts, it's very difficult to get things through.
Oh,
They
sure.
they redid the accident plan with better benefits, all right? And every 3 to 5 years, they'll redo their plans to increase the amount of benefits, tweak the cost on them, okay? But if you already have yours, you're grandfathered into yours, it doesn't change, all right? They did the accident plan, I think, in February this year. Massachusetts still hasn't accepted it. 45 states have. 5 states, Mass is 1. And I'm just looking at it, I'm going, yeah, that's going to take about a year and a half.
Right.
They just want to leave everything as the status quo, and they want to go over it with a fine-tooth comb to make sure that clients aren't going to get screwed.
Yeah.
And I understand that. I'm not out to do that to people. My main objective is to make sure they're aware of what's being offered to them
Yeah.
and how they can use it. But it has to fit in their budget. Okay? I'm not looking to put out as much as possible. To me, I want to make sure people get what they need, get what they want, and it's in their budget. The budget one's the most important one. I've had clients get, oh yeah, I'll take all 5 policies. Great. What's your budget? Well, I don't know. I looked, I was like, well, that's an important question. I said, because you're going to be spending $42 a week here.
Right.
I says, that's $168 a month minimum. I says, you're going to have a month where there's 5 paychecks. I says, you're going to be over $200 paying for this stuff. Oh, that might be too much. I said, yeah, it might be too much.
Yeah.
I says, what's a good number for you? Well, can we get it down to like 25? I said, perfect. Lower their disability a little bit, put them in a different accident plan, put them in the same cancer plan, make sure their life policy is the same. I said, there you go. I said, it's at 28. She goes, perfect, I can do that. I said, okay.
Yeah.
I made less money on it,
Right.
okay? But she has the coverage she needs.
Yeah.
That to me is more important. Doesn't do either one of us any good if she has it for 2 months and says, I can't afford this stuff and cancels everything.
Right.
4 months down the road, she gets hurt. She doesn't have any coverage.
Yeah.
God forbid she passes in her life policy, she canceled.
Right.
I had one client had a cancer plan. One of my first clients I opened up. Had it for 3 years. COVID hits. Trying to cut back. I'm looking, don't get rid of that, please. I'm like, it's not costing you that much money. You're talking $8 a week at the time. She goes, yeah, but I'm 38 years old. What's going to happen to me? I was like, you never know. Well, don't you know, the following year in August, 39 years old, she gets ovarian cancer.
Oh, Jesus.
She calls me up. She goes, any way to put that back in effect? I says, it's kind of pointless now.
Right. Right.
I says, you got rid of it a year ago.
Right.
I says, you can't pay the premiums back for a year and say, oh, I still have it.
Yeah. Right.
Her disability plan, I kept telling her, you need more than $500. You need more than $500. That's all I need. That's all I need. Just be glad I got the policy. I'm like, okay. How do I raise that before I go out for my surgery? I looked, I was like, you can't.
Can't. Right. Too late now.
I said, that's a pre-existing condition. I says, you'll get $500 a month, which is what you wanted to pay for. Bless you. And I'm looking at him going, this is why I have these conversations with you. It's not like I have a crystal ball. I can tell what's going to happen. I
Right.
can't. You need to be prepared for whatever happens.
Yeah.
She had her husband call me. Why can't she get that? I looked, I was like, I'm going to explain it to you just like I explained it to her.
Right.
It's a pre-existing condition. You can't back pay premiums and say, oh, I never lost it.
Right.
They're not stupid.
Right.
They have the records of your cancellation. They have your signature.
Yeah.
You signed it, gave it to me, I sent it in. If I never sent it in, you would have been getting billed for it.
Right.
I says, you can't have it both ways.
Yeah.
I said, don't get me wrong. There's nothing more than I would love to do is to get you paid on this. All right? 39 years old going through this, I don't wish that on anybody.
Right.
You can't cancel it
Right.
and expect to get paid.
Right. Yeah, it makes sense. Yeah, I'm sure there's some tough situations like that, and it, but it's just just like anything else, people try and take advantage of systems, and it happens.
You see the memes all over the Facebook and TikTok and stuff. People cutting in front of people, slamming on the brakes.
Yeah,
It's your word against them.
right.
They're trying to get paid. It's called insurance fraud.
Yeah.
All right.
John, you investigated that for a while, didn't you?
I did. Auto and home, yeah.
Home is the worst one, because when you're looking at a claim at home, you have no idea what transpired. You have to go in there and now have an adjuster go in there and say, did this really happen and when did it happen?
Right.
Okay.
Auto was more organized crime. Home was, like you said.
Interesting. Good old insurance world. All right, let's wrap this thing up. Every episode we do something called Toolbox Tips.
Okay.
And that's just advice that you would give to yourself 20 years ago. Before you got into this, before you got into shit, you were probably post office, right?
I was 36 years old.
What's the advice you'd give yourself then?
Keep doing what you're doing. Diversify a little more. And put more money aside.
Yeah.
Yeah. I'm not upset with my career path. Everything happens for a reason. I wouldn't be who I am today if I didn't take my career path. Like a lot of people say, I wouldn't marry my first wife. No, because I learned a lot from that situation. I learned a lot from the post office. I learned a lot from working at McDonald's for 8 years. Okay. I went through all their training classes, Hamburger U, the whole 9 yards. I still use some of those methods today.
It's a great program.
So when I look at it, I say, invest more, work harder to make this time of my life that much easier.
Right.
I mean, I don't work terribly hard now. I do a lot of hours. I do about 45, 50 hours a week. But my time management allows me to get a lot done.
Right.
Okay. Back then, my time management wasn't. It was dictated by where I worked.
Right.
Working at Aflac, I can dictate what hours I work, what hours I don't work.
Yep.
And it allows me to do things like this in the middle of the day.
Right. Go golf.
Go golf in the middle of the day.
Yep.
Take a Friday afternoon, meet with some clients, take them out to the course.
Yep.
And it's just having that ability to do that and still make a living. My biggest question when I took this job is, can I make a living on 100% commission?
Yeah.
There's no base pay.
No shit.
And
Oh, it's 100%?
100% commission.
No salary, no nothing.
Nope.
Interesting.
If I can do it for the amount of years that I've done it, there's no reason why I can't do it for the next 7 years till I get to 65.
How long did it take you on 100% commission to get to a point where you were making a comfortable enough living to survive?
First year, I made $50,000. That was my commission. Second was 80, and it's been over 6 since. So it takes a lot of effort.
Yeah.
It's not easy.
Yeah, that's tough.
You
That's a tough sell as an employer, man. Like telling somebody hey, you're gonna come on and do sales, but you only get paid if you get the sales. It's great for the employer because the only way that we're paying you is if you're making money. But as the employee, man, it's a risk, and you have to be pretty confident in your ability to sell and the network that you have in order to make that work.
The best part of the program is when you get a new agent in, they're going out with their district or senior agent, like myself, and working in my account. I'm splitting that commission with them so that they can
cool.
see how it works to get them paid in the first 2 weeks.
Yeah.
My goal is in their first quarter, their first 3 months, they make $10,000. If they can see that and they see the money coming in, they'll work harder. If you leave them out on a boat on an island, they're gonna flounder.
Right.
And they won't last.
Yeah.
So I've spent 2 weeks, a month training them, taking them out, getting them a little bit paid to keep them interested, to
Right.
keep them moving, to have them make appointments.
It's a good way to do it.
The first 6 months, the district goes with them. They make an appointment, the district goes with them on that appointment to close the account because they don't know how to do it in that point in time. All of that commission goes to the new agent. They made the appointment. And you keep doing that, and they keep showing you how to do it until you can close them yourself.
Yeah.
Once you start seeing that, and once you start getting paid, it works.
Right.
When I first started, I closed my first 2 accounts in my first month. The second month, I closed 3. The third month, I closed 4. And you have a bonus structure that Aflac offers up. First 3 accounts, you hit $5,000 in premium, you get a $1,000 bonus. Next 4 accounts, next $10,000 in premium, you get a $2,000 bonus. And in the first year, you can bonus up to $14,000
Oh, sweet.
on top of
Your commissions. Yeah.
So it's free money that they put out there.
Yeah.
It's up there for the taking.
It's a good way to structure it.
Because you're building a book, you're getting that.
Right.
So you're not just getting the commission when you make the sale. For the next 11 months off of that sale, you're getting a portion of that commission. So
Right.
in a monthly check. So you're getting that monthly check plus your commissions. Every year thereafter, you're getting 1% of everything you did in the first year in that renewal compensation. Third year, you're getting more renewals in that compensation. So every time you're opening up, putting in more policies, opening up more accounts, your monthly statement slowly starts to ride,
Makes sense.
goes higher. So if you open the same amount of accounts in year 1, 2, and 3, you're going to make more money. Inevitably, you're going to make more money in year 2 and in year 3, even though you're doing the same amount of sales.
Right, because you're getting the renewals.
Exactly.
Interesting.
And it just keeps going up.
That's a fucking great structure. I like that.
Go to a car salesman. You get $200, you sell a car. That's it. You got to sell another car if you want to get paid. But they have a small base,
Right.
you know. But if you don't sell anything, you don't get the base.
Right.
That's why I looked at it as because I sold life insurance when I was 24. I did it. I got licensed in Rhode Island. I started selling. I was like, okay. I still get a renewal check on some of the policies I sold back then.
No shit.
Yeah. It's all about different streams of income. You
Yeah.
can't have all your eggs in one basket. You have to have multiple streams of income.
Yeah.
My uncle had 4 life policies and 9 investments, all paid him separately. So he had 13 times he got paid a month, all throughout the month. So he was constantly going to the bank, cashing a check.
Yeah.
This guy was a janitor at a high school, okay? Retired at 55. I'm sitting there, I'm going, what did I do wrong? Granted, it was a different day and age, but
Yeah.
he bought a brand new car in 1980, $5,000, Caprice Classic. When he passed away in 2009, the car had 40,000 miles on it.
Simple life.
I look at that and I'm saying to myself, why can't we have that life now?
Yeah.
And people don't want that life because now it's all about how do I get to the next step?
Yeah.
How do I get to the next? I can't wait for the weekend. I can't wait for the weekend. You're pushing 5 days aside to get to 2
Yeah.
and wonder why Sunday afternoon you're sitting there going, oh, I got the
Back
Monday
to work.
morning blues.
Yeah.
I haven't had the Monday morning blues since I left the post office. That was a whole nother bit. This has been eye-opening.
Yeah.
Yeah, absolutely.
It's cool, man. All right. Well, very educational.
Thank
you. I feel like I know so much more about this shit now, and we have to talk. So, yeah. But yeah, man. So thank you for coming on. I appreciate you.
I can't thank you enough for the opportunity.
Yeah,
I've
no
heard a lot
problem.
of other people doing it. I'm saying to myself, you know what? This would be great.
Yeah.
Get to see you in a different aspect
Yeah.
of your life and what you do and the benefit that you offer up.
Yeah.
So many people to do this. I can't thank you enough.
Yeah. No problem, man. Yeah. No problem at all. Where can people find you? What's the best way to find you?
My cell phone,
Okay.
401-474-5538.
All right. You on social media at all?
Not really.
Not really.
No.
All right. Website?
All states?
I'm licensed in 35 states. That's why my CEUs are so high.
Listen, don't fucking get me started. It's just because I don't put my goddamn time in as much as I should. But so CEUs are like what's continued education units or whatever. And so like if I listen to business podcasts or business books, I get credit for it in BNI. So like you have to put in the amount of time that you listen to the type of stuff. And me and Alex are 1 and 2. Alex has beaten me, I guess, by a lot. I found out today. Yeah. But Yeah, so me and Alex are like number 1 and number 2 in the group for CEUs. And it's really just because I don't put in my time as much as Alex does. He's much better at that than I am. But
This is my licensing year.
yeah.
That's why.
Oh, no shit.
Oh, yeah.
Yeah. And you put them in, man. Fuck.
I
Some weeks I'm just like, I don't fucking know. I don't know how many. But like, it's at least 2 hours a day for me. How many hours do you do?
It's not so much 2 hours. Well, I listen to an hour podcast every time I'm in the car
Yeah.
to and from the office. So, yeah, it's 2 hours.
Yep.
And then I'm also doing my licensing on the weekend.
Right.
In every state, I have to do a different learning process.
Yeah. So you're just racking up the fucking
Yeah.
hours. Yeah.
And New York is a total different breed.
Yeah. Even than Mass.
Oh, New York is a separate subsidiary in Aflac. They have Aflac US, Aflac New York, and they have Aflac Japan.
It says enough. Mm-hmm. Interesting. All right, man. Well, we'll wrap this thing up. Thanks for listening, everybody. Thanks for coming, man.
My pleasure. Thank you very much for having me.